All right. I probably just blew someone's ears off. But you know what? This is wild, guys. We enter a market where yields are getting crunched, and I mean crunched. US 2-year is down a whopping 11.21% leading into today's market action. And everything that was put on during the Asian session, which was almost 2%, has been wiped off. How's everyone going? We start off the week leading into CPI with some serious action. And I mean serious, but luckily Treasuries is up at least. Yeah. Hey, everybody. How are we? How are we? How are we? We've got Frank. We're just going to read off some names here. Hot Potato, Ramiro, Aussie Cobber, Hugo, Tack, Stanlowly, ZZ Pappy Love. I like that name. Michael Moss and some others that are coming through. Thank you very much for joining us here. So as we mentioned, yeah, yields are getting absolutely crunched. We have to talk about that probably is the start of the storyline. Then we'll move into the rest. Now, where the big yield changes are is almost mind-blowing how much drop-off we've got here because we're seeing September yields. You can see it here on the chart, yeah? September yields have gone from being 5.67% and the expectation of most central banks moving all the way up to 6% plus. Remember, 50 basis points on the handle. And now look at this crunch. We're sitting at 4.3%. So it's basically saying we're not going to raise anymore. That's actually what's saying. So does this mean that the system's broken and this is the break? Is this the Fed pivot? Well, April rates say 4.6. So effectively, possibly one more hike. You know, can you believe it? We'll have to find out. It's going to be a massive one though here. People are mentioning currencies around the world are going wild. Absolutely. There's a lot of action. Of course, as always, guys, we'll be covering the S&P 500, Nasdaq, gold, and then we'll get into, of course, all the commodities, currencies, everything else that's going on. But these yield swipes are pretty big. It's not good for the US dollar theoretically, which I believe has changed trend as of last week. So you can see here the change of trend that came through. When it made breaks underneath this zone here, rallies probably will be faded. So why is it going up? It's mostly just escape from the fear and the fear that's gripping the markets right now. Thomas White says, holy crap, I just woke up. What happens? Yeah, yields, man. Yields down 11.43%, 4.06, 10-year 3.449. If you've been in treasuries, you'd be pretty happy. If you've been listening to concepts, obviously your ideas only, the stream, not financial advice. But if you understand that when yields drop like this curve tends to push the old gold up, of course, gold has been probably the asset choice as well. Treasuries, gold, even utilities holding better than anything else. Chris Vera says, all banks are sliding. Could this be the time to capitalize? I'm not big Look, I'm never big on banks, really, frankly. I mean, banks are great if you want income and things like that. They do say buy when fear's in the street. But the thing about the financial system is obviously we know the Federal Reserve is there. They've basically created that emergency liquidity. All depositors, as far as I know, are going to get paid out, but they're not covering the company itself. At least that's what we're seeing. So let's actually click over here to Market Watch. Let's click on the button. Let's refresh here. So as you can see here, Silicon Valley Banks rescue means the Fed won't hike rates in March, says Goldman Sachs. So Goldman completely changing, doing the 180 flick. And they're basically saying 50 basis points. Nope. Now 25 basis points. Nope. And now 0 basis points. So a massive switch in the markets. I think the CPI read's going to be the big one. I wouldn't be surprised at all if markets pressure the downside or waiting the CPI. That could be a really big scenario today. So let's actually take a look at the markets here because we've just entered what I call a major confluence zone. This is a pretty important level, and I think it's going to be key for us to look at on markets themselves. So we're going to make sure we're paying attention here on what's occurring, and we'll really need to be paying attention on this level here because this is one of the most traded zones of the last 12 months. And this becomes very, very paramount when we're talking about where is the low here. So new lows formed in the pre-market. It's been a pretty wild ride back down. Let's take a look at the 4 hours just to get a bit of an idea. See this highlighted red box here? This was not broken. It's a great short earlier on in the session. If anyone got this one, anyone in the chat get this? Anyone get a short up here? It was pretty good. Ben Sakola said markets have been pretty wrong about rate hikes and stuff. Yeah, absolutely. But this was a pretty low, I would say, lowish risk to decent reward type of short. Obviously, finding a short round here would have been good. Nice supply level. Comes back in, tests it off, forms a little high, bang, goes down with the rest of it all the way back to basically forming new lows, as we can see here. But yeah, markets are getting thrashed into the open. And I don't know if it's all bad. I think we're in a pretty key zone. So although you might look at yields and go, "Wow, it's really bad," we enter into a bit where I think there could be buyers. And if we bust through here, the next zone to find buyers is most likely down here, somewhere in that 37 kind of 50, 3,800 zone. I like through here. And the reason I say there could even be buyers is because we've now started to move at an accelerated pace. So you can't pick it exactly, but you'll be looking for the reaction to the daily close. I think today's daily close will be really important. Do we see a reaction up? Let's face facts. We're currently in a downward trend. We switched trend a little while ago. We found that the SPX broke underneath this level here, which is our daily level. And I'm kind of playing with the idea that it does something like this. And this is a real kind of, scenario. Did we see a huge amount of buying into the last Friday close? Not really. It was a little bit of buying near the end of the day, still pretty rejective. If it had done a bit more of candle work, e.g. something like this one here, I would have been much happier to say, okay, cool, I think we've got buyers starting to recommit. At this stage, they're selling into the close. So today's daily close is going to be really important. I believe 37.50 is super critical. These are the three gaps that we have underneath. So we've got 37.50, 37.83, 38.07. They're all gaps. And of course, we have one of the most traded zones sitting at 38.40. So unfortunately, all of this box becomes plausible. So because it's plausible to find buys, even in the wrath of the markets, let's face some of the facts. Yes, with Silicon Valley Bank, and yes, there's all these issues, but we know that the Fed's kind of backstopping part of it. We also know that we're coming into a critical level, that sentiment's going to be really bad and negative. It's a third week OPEX where there's puts all over the place in here. So you've got to start saying, well, even though I've been very negative mid-March, very, very negative into mid-March, which is, funnily enough, very close to where we are right now, I do believe that there's a potential chance that there are buyers somewhere down here. And the market, I think, is also overreacting to the yields. You don't just smash 12% off the yields so quickly. And I think things will stabilize. But what's going to happen is the market will freak out into CPI. So if you don't want to be involved in some seriously wild action, you probably have to wait until after the CPI number. Now, when does that come? It's Tuesday, guys. We come over here, we scroll through, and we go down. It's core CPI day, 1 hour before the market opens tomorrow. That's going to be a massive one. If CPI shows bad numbers, could be bad. Could be bad. Louis B says Tesla down heavy. Let's have a look at Tesla, because it's obviously been a stock I've been hating on recently. Yes, I know you might say I always hate on this stock. Remember, guys, I do have a Tesla. I just think it was overpriced. I liked it at 100. I liked it at 130. Didn't like it so much at 150 anymore. So it's coming back down to what I think is Earth, and it's going to open actually in a pretty nice area. So this 166, 163 could theoretically have some buyers in it. I'm not sure if it's a critical zone for me. I'd like to see Tesla back down in the 150s. What do you guys in the chat think, though? Give me your thoughts of Tesla right now. Be very interested in that. Kevin says just a pause in rate yields. Kevin also says the Fed broke the markets. Absolutely. Graham, good to have you here, Graham. To Cooler, Kevin says, wow, this day, maybe the start of 2008 all over again. Crazy open. An interesting open. I wouldn't call it an insane open. So being down this hard obviously is bad, but it's more interesting when you start to look at some of the most heavily shorted indices that are now starting to actually switch. So if we load, let's say over here, and we bring up the DAX, check out the DAX, down 2.5%, starting to drift over. There are so many markets around the world, Europe, Australia, UK, these are the Western markets I'm talking about. Then also the Nikkei as well, that have a lot of banks in them. And these banks are starting to feel that pain train. Now, because there's pain train here, these markets are starting to get flooded as well with shorters. And it's not really just a tech short here. It's more of a short across the old economy. So remember, the old economy is also exposed here. And because the old economy is exposed, no index is technically really safe. Douglas Hurstel, thank you very much for the $5 donation. What are bad CPI numbers? Bad CPI numbers are bad and good CPI numbers are bad. Yeah. Hey, look, I don't disagree with this article. I've said it for a bit. Bad is bad. Good is worse. All is bad. And, it's a great saying, and I'll say it here. The only time you really know a market's out of a base is when bad numbers are actually bad and good numbers are actually good. So until that point, do you really know a bottom's in? What do you think about that? Thank you very much, Douglas, for the very generous super chat donation. Appreciate it, man. Tesla will have to come cheaper, a lot of people saying. I believe it will because of the type of stock it is, but we'll find out. We'll find out. Yeah, this is a big one here, 9LS. Credit Suisse Group default swaps hit record amid SVB fallout. I totally think this is a big deal as well. Credit Suisse is probably the real problem because when you think about it, if you load up Credit Suisse, you look at their stock, a lot of people will have not done this. It's getting smashed 9.4%. We are sitting at 2.41. So we talked about credit default swaps. I made a couple of, I thought, hilarious tweets last year where I went and found that Credit Suisse building in Sydney. But basically, overall, we have a huge amount of sell-off going on and basically a panic run on one of the biggest banking institutions in the world. Its market capitalization, if you can believe, is 10.6 billion. And obviously, it's worth more than this, but it's just because the debt is so it's not actually worth more than this. So I rephrase, it's not worth probably anything. But it's, really to put in perspective, here's the GFC. Here's where we're at in terms of Credit Suisse. So 2.41, really low. Yeah, the credit default swaps are a really big problem. NVIDIA holding, heading lower. Yeah, it is. Thank you very much to the 1,156 people joining us. If you enjoy these streams, you find them valuable, then please remember to smash that like button. It really does help us out. And obviously, I always appreciate that very much. So, let us know. I think some of my markets might be a little bit, they're a bit delayed here. So we're seeing pretty big selling across the board. We've just made new lows on the Nasdaq. So Nasdaq's just made a new low. Let's have a look at that Nasdaq. There it is. So no reaction at all off this base just yet. Look at that getting crunched through it. As again, yields are the big story. If someone has the credit default swap on Credit Suisse, if you have a chart of it, share it with me and just tag me in Discord right now. I wouldn't mind sharing that. I don't have it ready, but it's a big one here. Charlie C says VIX is high, not broken anymore. Yeah, once you start pushing those 30-day plus options, then you start to see the VIX really spike up here. Real Rugged DIY says Credit Suisse seems to feel justified rating. Everyone else, maybe more inward retrospection is due, possibly there. Bank of America seems like it might be worth watching. They own at least one of those regionals that are getting dumped. Yeah, so let's have a look at KRE here, which is obviously regional banks as a market. So we'll load up here the DAX one and we'll load KRE. You can see regional banks. So they're opening pre-market 7.75% down, 46.76. So this is almost actually filling one of these gaps that was left from a little while ago. So absolute free fall. Now we've seen free falls like this before and what happens afterwards. So we had a free fall back in 18. We had a free fall obviously in 2008 and we had some free falls in 15 as well. This is a pretty brutal free fall though. It's equal in some ways and measures to actually what happened in 2020 and 2008 in terms of the regional banks. And usually these are the ones that fall or have the biggest problems first. And if it's here, then it's generally throughout the rest of the system. So we need to remember that this is actually an incredibly fast-paced sell-off. And if it continues, there could be contagion. So we can't, look, we could say, okay, technically we're coming into a zone. We have to take our fear out of it for a moment and say, what is our plan? If your plan's to invest, well, they say buy fear, but is it cheap enough yet? Now, this is where our old friend, the Ford PE, comes in. Now, I'm just going to read you out a number as of the end of last week. Okay, as of the end of last week. Let me bring this up for you. Okay, Ford PE of the markets. Let me read this. S&P 500, 18.2. Now, if anyone knows their Ford PEs, we should be at about 16.9 to be fair value. So we'll say we're close enough. We're probably close-ish today. So we're getting in on that 16.9. We have seen 15 as of last year. 15.7 or something like that was, I think, as low as it got. So we want to really see whether it's cheap or not cheap. Is it cheap? Not really. Is it expensive? Not really. So you've got to make a decision. Are you trade vesting? Are you investing? Or are you trading? If you're trading, you have to look at the levels on their merit. So what that means is when they come down to these key zones, if they make the systems that you usually look for, then you have to consider them as potential opportunities. It is a meltdown at this point. We have seen no market structure. I repeat, no market structure. Generally, you will see market structure near the bases on these kinds of things. And that's very important fact. If we don't see market structure, then we can't assume it is over yet. Most big bases tend to come back. They drop like a rock. They find automatic rallies or dead cat bounces. They dump again, allowing you to get in. So patience and reaction is the better play in these scenarios, unless you're a investor that wants to pick levels that you go, okay, I like this level and I want to pick it up. Now, just kind of changing the subject here, we really are seeing a huge amount of drop in the Nasdaq. So the Nasdaq's actually shredded that level. So we can basically delete that. No reaction at all. So what do? And it's starting to get crushed here, about 1.5. So I think it's the US 500 we should be looking at. It hit that level, bounced it. Now it's dumped through it. So we have to assume that it's going to go for, I would say, 37.60 and underneath. Aussie Cobber 71. Would I short here? Hell no. If I'm in shorts, would I be scared yet? No. I mean, why would you? It's coming into the range of structure, but I wouldn't be surprised to see a bit of a flash here in the morning. Aussie Cobber 71, $10 Australian super sticker. Thank you very much, Aussie. Always great to have you in the support here. FC says, wow, is SPY headed for 375 today? Yeah, it could be. We're entering into an interesting zone. I think we've kind of gone through one of my major confluences, which obviously is more of a swing method. I would like to see all the gaps fill. So there's 3 here, 1, 2, 3. So filling all those gaps and also getting underneath here could be a pretty wild move. Also underneath here, you have a 61.8 fib of the pull. So if you take the range and you pull a fib retracement from low to high, you'll notice right on that level, you're getting that 61.8. So I like it a lot, that level. I do think that it's possible for us to swing into there, but anything in here is where I'm looking at potential relief. Okay. Even though that sounds insane. I know it sounds insane, but you've got to believe that there is sometimes the markets do overreact and they get pretty wild. They'll push. And remember, what just happened a month ago? Over here, most of you guys were feeling the extreme FOMO. Now the market is feeling the extreme fear. So what changed? Okay, you could say Silicon Valley Bank, but that happened here. So realistically, there's FOMO and fear in the markets all the time. It's whether you can adjust yourself to it. So are you prepared if the market swings 37.50 today? What are you going to do down there? What kind of structure do you have? Are you just going to say, look, I'm going to sit out of it? Are you going to use options? Are you going to do, what are you going to do? So that's a big thing. Jan Christensen says, what about the 10-2 year? I don't think it's really too relevant. It should be, well, it'll be dropping. So you'll see the spread of that dropping off, but that's not unexpected. Funnily enough, though, you know, treasuries, I've been crapping on about them for a little bit. Have I, guys? Have I been crapping on about treasuries? They look pretty good today. Can we take a look at oil? Yeah, we can have a look. BTC up 2.5%. Yeah, I don't trust BTC. No. If this is contagion in the stock market, BTC will soon get smoked. Yeah, BTC will get smoked. Now, I don't think the Treasury is a good buy today because what are they coming into? Heavy, big top level. But it just shows you that all of a sudden it shifts and the market almost prepped it with this candle here. Yeah, so it's running, yeah, because suddenly the US 10 years getting destroyed because the economy is broken. Remember, generally speaking, the fundies and everybody else only likes treasuries during two times, when they hate them and when they need them. And I said last week, to a degree, I believe they required them because of this problem. Yeah, so it's a big deal here. Silver 5%. Yeah. Utilities are holding up well. Well, utilities should be a defensive hold. Like, as in, like, they should hold better than the rest of the market. They're up. Well, they're not up, sorry. They're down 0.33%. Probably some utilities will be up today. Joshua Butler says $5. Thank you very much. Joshua, do you think the market will want to sell off if the CPI is hot, considering all of the puts expiring this week? Look, the put story is definitely a component of it. I said this to someone in training today. I said to them, look, I don't know if I'm paying too much attention. I said it on the weekend as well, to the puts as much as I usually would during a maximum pain week. We have to face facts. We're in a fundamentally driven market. This market is fundamentally driven. It is not necessarily, it's driven by extreme event, which is not normal. Okay. We're not in a normal technical market with things that don't matter. This kind of matters. I mean, it's a bank institution with a bunch of other, questionable tendrils everywhere that need to be sorted out. It's not like when something gets stuck in the Suez Canal and it drives backwards and forwards and gets stuck for 2 days and everyone starts freaking out. It's a totally different scenario. So do I think that it could still sell off? I do. It hasn't paid puts. I mean, almost the options market's almost paid no one off for like 4 months straight, other than a few Tesla call buys at one point, but not since they got hot. So they've made plenty of crayfish monies. Don't worry about that. Quantum Mechanic, $20. Thank you very much, Quantum Mechanic. You're a star. Would you buy SQQQ at the open? No, not personally. My personal opinion only. Also, I'm sponsoring your pumpkin pie purchases in Vegas with this. Thanks very much. By the way, if anyone's interested and you like the content we produce, check on the March giveaway. Link in the comments section. I think I've pinned it, and you're welcome to enter that. It's totally free to enter. I just got some giveaways that we're doing next stream on the 20th. Thank you very much, Quantum Mechanic. Would I buy SQQQ on the open? No, because like any of these trades, where is it? Where is SQQQ or the Nasdaq? It's in the middle of nowhere land. It made a new low, sure. It came down, sure. But what's that? Is that a key level? I don't think so. Is the US 500 hitting key levels? Not really. I mean, it's in the middle of structure, so that's fair enough. You could say, okay, that's some demand. But that doesn't mean I wouldn't sell there. I mean, your best case is kind of here to here generally in terms of statistical advantage. So yeah, I don't usually make those kind of knee-jerk open reactions. I like to kind of look at it on its merits. And unfortunately, in trading, if you want to get ahead, if you want to be better than others, you have to see things maybe a day or two before or the day before others see them. And in this case, we were told last week, Silicon Valley Bank is no good. Okay. We saw treasuries start to move. And there's a problem in the bank. We were basically given 2 days to make decisions. It's not like it's even that the COVID thing. We were given a month to decide whether a thing that was locking down an entire country was going to lock down everyone else. I mean, it's a cold. Yeah, it's going to probably come out and get other people. So let's face it, like, you're usually given more than that. So you're generally going to have some potential chance to get in early if you know the way that the asset classes move. When is the Fed emergency meeting? I don't have the time on that. Jeffrey Lindley says everyone is going to withdraw their accounts from small and regional banks. Yeah, I agree. People will do that. That's why they're kind of saying, that's why they came out with their little emergency. Oh, we'll backstop all these banks. Don't worry, guys. Because they don't trust the system. Thus, this is Jeffrey saying this, thus small amount of regionals will fail, taken as whole as they are too big to fail. Yeah, the big ones will definitely benefit from this. You could say that the likes of JP Morgan and other big banks will actually benefit in incoming deposits. I truly believe the big ones don't they actually don't suffer from this. It's more likely that they do okay. So US 500 making a recovery here, was down about 1.5 before getting shellacked. Now it's up about 0.5. Don't think it hit anything too critical other than this little demand in here. So you got this little structural demand that this market came off. So I could see why it bought in here. I like in between this zone and this zone quite a lot, but I still would like to see it wipe all the 3750s. The real market open will clean that up. Press conference is at 1 today. Let's refresh this, see if this thing opened, see if they actually updated it. Sometimes they do. 13th. Yeah, they haven't done it, which makes sense. They may not do it. Yeah. Oh, doesn't matter. Yeah, so we came in here. Your copper 393 level has been triggered. Oh, yeah, copper's down 1.8. Yeah, so copper also cutting it, getting cut up. I saw that before about HSBC buying out. Let me see here. HSBC bought the UK Silicon Bank branch for £1. Yeah. So where's the thing here? I think it's here on Reuters. So this is supposedly the story, which was out a few hours ago. HSBC rescues British arm of stricken Silicon Valley Bank. We scroll down here. What else have we got here? Asked about HSBC's white knight role, Hunt said his priority had been to avoid using British taxpayers' money. £1 is worth $1.21. Okay. So anyway, there's a whole article about it. So there you go. Yeah, HSBC to the rescue, guys. To the rescue. Can you have a look at Tesla? Look, it's in the first demand area. I don't really like Tesla till it hits 150, but I could see merit in the current area. So this is where the current market was, 166. This is obviously a little bit of structural area. The Widowmaker just made a lot of widows right now, whoever went long at least. Natural gas. I don't think natural gas is that bad in comparison to the others. When you say it's bad, what do you mean? It's on my yellow line. I don't really think it's that bad. US US oil on the lows, critical zone for oil. So I've had this up here for a long time, looking at the dailies each way. So obviously the daily highs and the daily lows. And yeah, interesting close here today for oil. If it does end up getting barreled through, look, oil hates yield cuts. Okay. Gold loves yield cuts. Oil hate yield cuts. So oil could be looking at further lows down to the 65s. I don't like oil here at all, but I don't really feel like doing anything with it either. Market is factoring a pivot, sure, but I don't care until the pivot happens. CPI will figure out whether a pivot actually is due or not. I mean, let's face it, if the CPI comes in hot, the banks will not be able to pivot. Like central banks can't. If it comes in hot, it's not like they can pivot. It's back to retest. Yeah, so US 500's coming back to the lows here. So if you want to have a look small time frame, you can see the retesting that's coming. So this is the low that was taken just before. Saw some low here, structure, dropped, came back up. This is a critical level for it. If oil breaks, I think it goes to 60. I think 65 is definitely very achievable. Thoughts industrial sector, not too interested in it this time of year. Generally look at staples and utilities myself. The best they can do is pause right now, probably. What's the forward PE? Forward PE is the forward projection of earnings in the future. Because the market doesn't trade on the current rate. It trades on the future rate, yeah? So this is a real test here coming up for the stocks. Stock markets around this zone could be shorted back off. And today could be the bloodbath. You know, if you get another 2, 3, 4% or 2, 3% down, like how much extra would this be? So if it dropped to 37.50, another 2. So yeah, 3%, it's possible. It's possible. If they pivot, inflation will rocket again. Do remember we've got CPI coming back through. Look, the Fed cannot afford to let go of their position. If they say, oh, it's all good, we've got everyone's back, that's why they're specific in their wording. Let corporates potentially buy out this trash bank and then let them deal with the depositors to kind of help the financial system. But they can't afford to drop their rate holds or hikes at this stage unless inflation is actually dipping. You have to hold. You have to hold the line. Yeah. Like Hodor or whatever. We need to Hodor the line if you're the Fed. And that's why the market's kind of in a conundrum. It's saying, hey, we're really sick. Something's really sick. And the Fed's got to say, well, I can't do anything about it just yet. I've got to deal with this. I mean, I'm sad for everything in Western society, really, because it is clearly a sign that the market's completely stuffed. And what I mean by that is not that our stocks are all going to zero and everything. It means that the monetary system is absolutely broken. Broken. And it's just a matter of a decade or 5 years or 10 years or whenever. And I'll say this once here on stream and I won't say it again. If housing debt is toxic, mark my words, if housing debt is toxic and it starts to lead a crash in the future, I'd go hide under a desk for a while, okay? You want me to talk about being the biggest bear in the, I'll come out and be Burry and go wild on television if that happens. Because they can't support it. You want to go bail out that market? Good luck. Good luck. What are you going to do it with? Your fake treasury money? I don't think it's going to work. Nope. Thank you very much. 1,600 people joining us. If you like the stream, give it a thumbs up. If you agree with that comment, give it a thumbs up. If you don't agree with that comment, give it a thumbs up. That's how we do it. 10 years seems about right. Yeah, we're going to have probably a bit of a longer one. I still think we get through this, guys. Yes, okay, I think the market might come down lower at some point and we get some earnings compression. That's all good. Earnings compression is good. You know, two of the factors that we talked about recently have been EPS growth turning negative, pushing some pressure on the market, but not being epically disastrous. And then, of course, we've got ERP, which obviously is risk premium, which I believe is now becoming a thing in markets, which tends to get priced in around recessions. Am I negative all the way to zero? No, I'm not a big bear. Look at the candle on the Qs. Which one? You want to look at the monthly? What time frame? This is an interesting chart that I put in the weekend video, which is SPY versus treasuries. So since we had the whole crisis in 2020, SPY's been on this really nice trend line to do with treasuries. Good combo code here. Interesting break. Oh, Biden speaking right now. Things are great, guys. It's all good. Man, I almost want to put him on TV on here, but I don't. I'll just chill. We'll talk about markets. I don't know what he's saying. That's okay with me. We'll just sit here and see how the market reacts. We're interested in the reaction. 2-year yields dropping like a fly. In 2008, we had the same. Wonder what will happen. What happened back then? Yeah, so 2-year yields definitely got flogged. Maybe we can have a quick look at that. Load up some 2-year yields. So let's just quickly look at the 2-year. Let's have a look at the point that we were at in 2007 and 8. You can see the yields getting demolished. And what I like to do here is you like to load the SPX up. And if we check the SPX over, we can see here, I don't know why this is such an ugly looking thing, but anyway, we can see kind of when the yields started dropping and the yields precursored. Remember, this is a precursor. Look at the yields. The yields didn't like anything. And the market's like, nah. Oh, whoops. And then yields actually spiked up, funnily enough. And then they started dropping again. And they were well into the drop. And then the market just flash tanked. So, but it is a bit of a different scenario. You know, a lot of people are going to say GFC 5.0 and stuff. Yeah, it's not toxic property debt. It's a bit different. I think he must have just said all is good because the market went up slightly. All's good, boys and girls. We're all good. We're coming into that important area though. 5-minute chart, like very interesting pre-market here. Obviously, the flies on the wall are listening to everything. I don't really think his speech should do much, but anyway, we'll see. If yields go down, aren't the markets support to go up? Well, so you assume, remember, yields don't go down because of the goodness of the heart of the Fed. If the Fed actually follows the curve that the markets think, something broke. I've said it many times, and I've had it on. I've got a chart where I always talk about something breaking every single day. Where is the chart? I must have removed it for a second here. Well, anyway, you know the one I'm talking about, guys. I always bring it up. And basically, it's a chart where it shows you every single pivot in the past with a rate hiking cycle creates a breakdown. Now, it's an assumption that everyone's making that US 10-year and 2-year yields actually rise XLK and semiconductors. I've never found real proof that that happens. The federal stimulus and crazy asset purchasing, thanks to central bank policies, now that gives a good run on tech companies and a nice high valuation. But yields alone, in terms of cuts, never seen it proven properly. Hey, if you've proven it, send it over. Nat gas spiking back up. Well, natural gas has just hit a level that we're interested in. I don't think it's destroyed everybody yet. It's done exactly what we thought we'd see here. Just remember, when you see panic trading like this on news, it can also turn on a dime. Absolutely correct, Kevin. We're in a zone of interest with a drop of interest. So we put this in perspective. We have a weekly that's dropped fairly consistently. You know, it's funny. A month ago, everyone was saying, oh, the moon, the moon, the moon. It's true, yeah. Please don't forget that. Don't forget how everyone felt there and harness what you feel here today, because it's very important that you've harnessed both emotions. I don't think we have a sign of turn yet. Okay. I don't think so. Could be wrong, prepared to be wrong. Why? Because I don't mind if I miss the bottom. It's just what you do next. If you see a change and then you don't know how to get filled after that, then that could be a concern. Most people, when you first start, you want the total bottom and the total top. Over here, FOMO fest. Over here, fear fest. But you've also got to be careful to stay away from some of these ones that sometimes close right on their lows. Now, we did find a little bit of buying in the Friday, a little bit, but maybe not enough. You know, this is often what happens in those cases. Close today is very important. Very, very important. Fed is buying treasuries, MBS at par, huge QE. No, yeah, we'll find out whether the QE is really sustained. And I do think that that's the main problem with these markets. Even if they do rally, let's say it's such a problem because the inflation component, if you come and stabilize the markets too much, then you just prolong the concept of potential stagflation or those kind of issues. Big switches in yields. We just saw a big switch, -12 to -8.77. So here's the 5-minute. Let's put it on the 5-minute. We're coming up to the critical point for the markets to test. So this is right around where the markets are going to have issues. So this is, we're basically cracking in on the S&P 500 to a pretty critical zone. And we're about to reach it now. So here we go. We're entering into this interesting confluence zone with the previous supports and the resistances. And we'll have to see whether the market wants to hold here or not. So big switches. I mean, basically a percent now back up off those lows and a critical point that was just reached by markets. Little miniature critical point, we'll call it. DM says, want it to go down to 3,000 or lower. Do you have a plan down there? Are you sure when you get there? If you get to 3,000 or lower, the news is going to be diabolical. So are you prepared to buy diabolical news? It'd be terrifying. So you've got to have strong metal. The what Westerosi Ninja says, we need hot CPI this week to really put the clamps on the Fed. Yeah. This is going to be a huge CPI number. Like, imagine if the CPI shows weakness and shows a slowdown, then that enables the market to go, woohoo, the Fed's going to come and support us. But if the CPI comes in hot still, then all of a sudden the Fed's got to put clamp on the market. They got no choice, or the market's going to hate it. The market is going to hate it. You would think it's a big deal. Odd rallying, yeah. Dollar index is not strong right now. US dollar probably, as we saw with the data that we had the other day on the channel. So the data that we shared, it's most likely was in a bit of a bounce level. Supposedly he told everybody that's all good. Jason Saris says, just buy gold. Well, that only depends whether you want yields to go down. Yields go down, your little gold trade will be nice. Possible 383 bounce. Well, we're at 383 right now, so not really. 383 is a little bit of a interesting little shorty zone where you can see little people coming in. Kangaroo market, most likely. Mixture of which could be stagflation. Again, gold does well. Thank you to 1,753 people joining us. We're about 16 minutes off the market open here. An absolutely monumental market day. Of course, one of those ones that you want to be around. Some of the top things at the moment, obviously treasuries performing well, but coming into pretty stiff resistance. We saw the US 100 make a new low before and then start to rebalance its way back up. So it's at a pretty critical little turning point here during, I guess, Biden's emergency speech. We've got here gold plowing higher. So it broke through this high, pretty big deal. Gold loves the low yield, so that's a big thing. Oil's getting crushed, makes sense. If the yields keep dropping down, you'll see oil continue to do pretty poorly. And we have Tesla kind of opening somewhere in this red box, it looks like, which is the first kind of zone that you could see buyers recommit. If Tesla fails here, though, I don't see anything holding until here. So for basically, what is that price? Around 162 all the way down to 145. There's not much action. I mean, there's almost no structure here. Tesla could do its own thing like it's been doing as well. Can Tuna says, how likely is 50 basis point hike at the moment? Probably 2%. It'd be a lot lower. Yeah. BTC short-term balance, long-term is going to be 8K. Yeah, don't get BTC. It's stupid to think BTC should be up during it. No. It's a risk asset. People claim it as a hedge. Today it looks like it's hedgy. I don't see the correlation long term. You might disagree with me. I like Bitcoin. I don't even hate this price. I don't mind 20 grand if you really like Bitcoin, but I'm going to stay consistent and I don't really find it attractive at these prices considering the risks in the world. Rob C, great to have you here. Options for the week, SPY are a put fiesta, which makes probability of the bounce higher. Theoretically, yes, and it is third week OPEX, theoretically. So here's what you're talking about. Let's refresh it. 17th of March expiration is a quadruple witching OPEX, so it's a big one. 390s, 132,000, 105,000, 109,000. So it is a put fiesta. So you've got to be a bit careful here. Maybe closing of puts could be interesting as well. Maybe some profit puts come in and they close them up. But yeah, look, I could still see the markets doing this. End at something like 390. But what if you push a 375 first? It's possible. Why not? Why couldn't you do that? Push it down low, push it back up, expire it. Really, it's where does the market want into CPI? I mean, CPI is a risk. So we've got to think about how would the market like to position into CPI, and that's the tough one. See, if I was the market, I would think we have potential contagious banks. We have the Fed that has to support us. And if the CPI reads bad, then the Fed might not be able to support us. So technically, that's a risk. So if the market could set up quite easily at around that 375 level for that. But generally, it'll be on a critical level. Is this a critical level? Probably not enough. So yeah, you'd usually be like here or here. Explain reasons for the 2-year falling, please. It's pretty simple. I mean, the market's saying that the Fed can't raise rates anymore because they broke something, and they support accommodative Fed. They say there's a sickness here. Regional banks can't hold this. We think the yield has to go down. CPI will be bowed. We'll have a look there. Nat gas launching for some reason. Well, I don't know. Have you been watching the videos we've been doing? Nat gas is sitting right on the level. Like, yeah, right on the level. So if you look at nat gas, I mean, come on, man. I'll just zoom it in for you, okay? Here you go. Just zooming that in. There you go. So, yeah, I mean, I can see why it would bounce there, but doesn't mean I like the Widowmaker. How do you feel about shorting XLF? No, I don't want to do any of that stuff. The tools are broken. The tools are there. It's just everyone's soft, and they're not prepared to push the markets where they broke it a long time ago, and now no one's prepared to take. There's always quick fixes. I don't even know. I think not to get political, but I really truly believe that most people are sick of quick fixes. Truly, we need long-term thought processes. My opinion only. Okay, I'll just leave it there. Long-term, guys, not this short-term. Oh, fix it tomorrow. Flailing everywhere. There's outrageous people that go crazy about stuff. We need long-term fixes, not short-term madness. Zeitgeist, $10. LQD weekly chart, 2 big wicks and a gap up today, trying to make sense of the rotation. Yields down, bonds up, man. Yields down, bonds up. Treasuries up, quality up. High yield, now that'll be an interesting one. Let's have a look at high yield here. High yield. Junk bonds. Yeah, so junk's down. So even though the rest of bonds are up, junk's still down. Toxic junk. And LQD, which is corp grade quality, that's actually pretty beautiful. It's a pretty beautiful trade. Really nice. I like corp. Oh, yeah. It's just like treasuries. Treasuries probably doing a bit better. So the reason this is up is because you've got yields down. What a market manager is going to do? Oh, I might go buy some corp grade. Imagine saying to a client right now, hey, I'm thinking about buying you some high yield junk bonds. What do you think about that? You think the client's going to say, hey, that's a great idea. Let's buy some high yield junk bonds into a credit default swap? I don't think so. So that's why you've got anything that's quality. Today, quality bonds and treasuries win. That's what's winning right now. Quality, quality, quality. Thanks, Nikos. Appreciate that, man. Best analysis. That's the key word. Seems like no clear sector rotation. You'll see it in the open. So as we come in 9 minutes from now, you'll probably see, hopefully, XLU, XLP holding a bit better. They should be the defensives that hold up, even go partially green, maybe, even in a horror red day. But everything at the moment is not so good. So if we go back over the US 500, you see there's 2 tweezer. So we'll see whether this actually now turns down. Inflation has to come down, rates up, unemployment up. Yeah, but people just spending. People got used to just being wild. I mean, you look at those credit cards that we showed recently, the crazy credit card debts. where everyone's like, yeah, we buy everything. Can't afford it on the high yields, but everyone's used to getting bailed. It's really scary. Thank you very much, Zeitgeist, for the donation. Appreciate it very much. Hopefully that makes sense. But yeah, high yield is trash. Reverse Jim Cramer ETFs. Man, did I hear right? Chat, you tell me this. Did Jim tell people? Did he tell people that SVB was good? Am I reading that correctly? Did I see? Is that a troll or is that real? Did he say that SVB is actually a good bank? Oh no. Yes, a month ago. No, it's Best Earns. Oh, oh, it's terrible. Oh, it's so bad. Poor- he is. You'd think after all these decades that he wouldn't bottom hunt anymore. Why does he bottom hunt trash still? I don't understand. I don't understand, man. You got to buy elastic demand. You got to buy quality when it drops. Quality, not crapper. That's so bad. Probably press the buttons too while you're at it. Oh no. It's all right, Jim. If you ever hear this, it's okay. I understand. I know every day it's tough out there. You got to offer the opportunities, except unfortunately, toxic banks are not one of them. Yeah, I remember. That's why it's so funny because of the Bear Stearns thing. Yeah, the 2008 Bear Stearns thing. So we're at kind of like a little turning point here potentially for the US 500. So far, it's done the classic kind of tweezer, almost too classic, how the tweezers here on 5 minutes. 6 minutes till the market opens, and we've got the double weird tweezer sitting here on the direction of the current trend down. Let's just go over the levels again because everyone probably cares mostly about things. Yields, here's the stories. Yields down hard. US 2-year down hard and 10-year down hard, basically saying the economy is in bad shape and the market wants support. We have some support from the Fed. Obviously, HSBC bought part of the toxic Silicon Valley Bank, cheap. And we basically are sitting on a zone where you could see buyers recommit. Now, I would like to see all the fill gaps completed. So that's if we go over to SPX, all these levels down here. And I think the most clear level to see the markets get to I'd really like to see here around the CPI number. So basically pressure the downside into CPI, get the CPI print, find out the direction the market really wants to go, whether it says, okay, cool, things are good, rallies, or it dumps off. I do believe the market will want to be at a pressure point ahead of CPI. And we have two key zones for that to be there. We either have 39.20 or we have 37 kind of 50, 60. All right, they're the two big ones here. How low do you think the Qs go? I usually use the synergy of the US 500 with the Qs, man. I find the S&P gives you a much better, clearer picture. And then if you wish to trade the Qs, you trade them off it. So yeah, that's the general way I do things. I just think it's a much more logical concept here. Mickey says to the moon, sure. But is today the day you want to panic? Not really. I mean, if you're going to panic, you should have been panicking last week in terms of setting up things. We know everything we've kind of talked about in the channel is technically playing out. Bad yields, good for gold. Bad yields, good for treasuries. Bad yields, good for quality bonds. China's kind of holding its own as best it can. And the US market's obviously freaking out, but it's coming down to a zone we thought. Now, remember, the data points to mid-March traditionally being a turning point for markets. We'll have to find out how. Sectors that are interesting to watch today will be utilities and staples to see whether they actually find bid. And yeah, today's close is absolutely paramount. SPX close daily, big deal. Until we reclaim above here, and you'll notice I wrote very important zone around 39.40. I think 39.50 to 39.80 is super critical on the bull side. If we reclaim past that, could be a big deal about rallies. But at this stage, you can't say it's a super rally. What the hell is this? Yes, we've got structure. We've got a million gaps too. So yeah, I'm thinking at the moment, the market pressure is down. What move are we expecting on Tesla? I haven't changed my opinion on Tesla. It's been pretty similar. This is an interesting little miniature zone for day traders only. My key is to see it. I want it down here. That's where I want it. We saw the roll. I bet you most people weren't on the roll or weren't even considering it. I said on Twitter, imprint it into your mind. If you get it to 155, it'd be a good one to keep in the, like literally, has anyone actually done TA where you got like snapshots in your mind of glorious trades that you've taken that you just go, if I ever see that again, I'll be like, yes. Have you imprinted those into your long-term memory? Has anyone done that? I have a few of those. Tobias Bourne says this drop has legs, guys. At the moment, yeah. I mean, it hit the area, it did the little tweezer short. At the moment, it's shorting off. CPI coming in hot. That's an assumption. We don't know. Check NVIDIA. Yeah, I'll check NVIDIA. Not down that much, 227. So we're a few minutes off the market open here, guys. Almost 12:30 for me, AM here in Australia. Thank you very much for joining us. 2036, guys. Oh, thank you very much. We hit 2K. It's been a while. So we always get like 15 to 1800. Thank you very much for joining us. If you enjoy the show, subscribe, enter the free giveaway. We've got all that stuff going on for March. So if you're interested in doing any of that, that's going to be cool. Again, key levels, we're looking at the 37 kind of 50s, ideally as a really, really key zone. That's like an extreme hit. At the moment, we're in, I would say, a miniature. We saw a big sell-off from up here. If anyone got that in Asia, congrats to you. Very, very nice sell-off. But yeah, at the moment, the pressure is to the downside, and that's where we're seeing this market kind of rotate towards. And you can see it's starting to sell off into this open. So again, flashing in 1.3, yields down, market wants support. CPI numbers tomorrow. That's going to be the flashpoint, I believe, that will really allow this market to make its direction move. Bayliss Nicholson, S&P 500 forming bullish divergence on 1 hour chart. Yeah, maybe, but here we go. Ding, 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 ding. We are open, guys. Here we go. Look at these stocks. So look at that. See, the tech stocks aren't down much. So this is across other sectors. Let me load my sectors up. They look like worms. So here's some worms. We'll get the worms going on as we get the tick coming through. All right, here we go. So GDX up 4.67%. So you can see gold doing really well here. We've got XL. Look at the worms go. It's a race. XLP up, IBB up, KRE. Oh, whoa, whoa. Oh, 13% down on regionals, guys. Damn. That's brutal. 13% down on regionals. That's nasty stuff. So yeah, utilities up 0.02, XLP up 0.2, the normal suspects up in a down market, but those regionals are getting destroyed. Let's have a look at those on the chart here. That is some nasty business, I got to say. Oh, jeez. Ugh. Oh, that's bad. It's bad looking, yeah. That's probably, yeah, I mean, that's equal. Geez, that's actually pretty bad when you think about it. What do you think about that, everybody? Ugh. That's some, I mean, but it's not hitting the tech, is it? Look where it is. It's not in the tech. It's in the nasty banks. Geez, the banking sector, though, KRE down 14%. I know I'm a bit quiet here because that's actually pretty big. I mean, I'm not in banks, so it doesn't worry me. But the point is that you're seeing a really huge single sector hit, and that's a single sector hit. I want to load up XLF versus it just so we can see here. Tesla, how much is Tesla down? 3.31, so kind of still holding around that zone. So you're seeing major financials finding some reprieve, the market overall finding some reprieve. But yeah, there's this huge sell-off in regionals, maybe overdone. That's a big sell, 14%. It's getting close to filling that gap. So that takes us to the price that we were at if we come down to here, which was 2nd of March and 26th of October 2020 and June 8th of 2020. So you can just really see how much pressure there is on this financial system. I mean, that's a big sell. I expect that's pretty fearful. A bit too much, I reckon. But anyway. Oil is up 5%, nat gas. Yeah, we saw natural gas before. Very interesting KRE, though. I want to bring up the other chart again. Let me just see if I can bring that chart up again with the squiggle lines. So yeah, gold 5.53, and look at that, defensives all flatlining to up. Interesting, bio's up. Oh yeah, of course bio would be up. What am I talking about? So much cutting of rates, really good for companies that make zero money, which is bio. If you ever looked at has anyone ever looked at bio balance sheet? Absolutely horrific. It's literally a bio's job to make a drug, sell it to a big company so that they can do the stage 3 clinical trials or whatever, because they can't afford it. Stonks opened up lower. Wow. Yeah, stonks opened up lower, man. Now, I just want to point out something that I mentioned last week. Intel. Why, hello there, crapper Intel. Did you see, guys? Did you see? You hated on me last week for Intel, didn't you? You hated on me. You said, no, Intel's crap. Well, I say this. Intel is not down in a down market overall. So there you go. It helped. It's because it's in its own little world. That's what the Intel is doing. So yeah, look, there's no signs of pure turnaround here. Let's just quickly look at these key low levels again. We're getting pressure put on the US 500 early. KRE is obviously the big hit suspect. REITs getting hit. Yeah, REITs will get hit as well. And in general, look, any of the small cap companies, they're going to be brutalized. So if you look at US 2000, Russell always takes a massive dive in these kind of hits. So yeah, it makes sense. Small banks, if you actually look at the Russell breakdown, I think it's 20% of the Russell is small little weird banks. So yeah, it makes sense why it would get hit so much. It's down a total of 2.47%. But it also has a lot of companies that don't make much money, which might enjoy US 2-year yields being down 10%. Weak open in general so far. That's correct. We saw just before we saw the tweezer top. So for people that like the little tweezer top reversals, that was a good little scalp, I guess. Not that I suggest you do anything in particular, obviously. DCS says FX evolution, fear and greed 20. Is it really? Is it that high? Like, is it like low? Is it moved that much of a change? I'd also like to let everybody know that I've officially booked, and I will put it out next week if you're interested. We're going to be coming to Vegas. I'm coming to Vegas this year, September, whatever late dates. So yeah, definitely if you're interested, we're doing a conference. I'm super keen on meeting a lot of you guys out in the community. It's the best community on YouTube, on Twitters, and everything else that we do in the Discord. So if you're interested, consider it. Otherwise, I'll be floating around America as well for a few. I got to come to America. Hey, I got to get the bull, got to pat the bull, take pictures with it in New York. That's what has to be done. Extreme fear, 21. Yeah, so big shift here. Obviously, greed a month ago, all the way down into fear. Fear is good in terms of, you might say, okay, opportunity, but not just yet, in my opinion. Why is XLE getting crushed? Because it hates yield. Yield drops like this, very bad for oil, man. You need to understand your oil. Tried to pull the market up by buying. Yeah. There's definitely pressure being put on here. You can see that the S&P 500 is trying to hunt those new lows. It'd be interesting if we see that. I might stick around for a few minutes here, find out how that opens. Let's look at our squiggle lines again. I want to see squiggle lines. KRE down 15. Ooh, it's really bad, that 15. I mean, it's a day you remember in your mind, and you can say, well, that was a big day. 15% on regionals, guys. That is an absolute bloodbath. But look at my little staples. Look at them. Yeah. I mean, I say yeah because they're holding up. I probably shouldn't, but I am happy to be right on that one because it's a pretty bad day. Just in, trading halted for multiple US bank stocks at market open. Yeah, I totally believe it, man. It's bad. Can anyone give me some tickers on things that are down huge? In fact, actually, I might just load up this for a second. Let's have a look here at the sectors, industries. I want to see percentage change today. Let's have a look at some of these nasties. Oh, there they are. Okay. So percentage change. We want to see this. Oh, what? 74%? Damn. Western Alliance. That's so bad. 74%, 65% First Republic, Pac West down 43. Oh, that's some nasty business. That is not cool. So no wonder they're halted. Yeah, halts across the board on some of these. It's like that's seriously nasty business. So a few banks look like they might be getting no bust up. Bank of Hawaii down 30. So there's clearly a run. Does anybody know out 74%? Does anybody know of people in their family? We're just doing a quick poll here that are actually going on banks and saying, okay, where we're going to remove our money. Does anybody know that? Like, is in that they're removing their money from regionals, even though they're not necessarily affected banks, and they're bailing and going into JP and others, or whatever else they're going into, big ones. Is that happening to people around you? Are they actually freaking out and doing that over the weekend? And I'd be very interested to know if that's something that's going on out there. Guess no one believed Biden. That's true. Andrew Clodfelter says, yeah, I know quite a few. Absolutely. I mean, I always believe you should bank with quality institutions and split your risk. I mean, 250K, 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 250K. I'm always about the risk management. J Doe says, here in Australia, it's happening. Really? I thought everyone just banked with 4 banks here in Australia. Money in the pillowcases. People in my circles are. Here we go. Lots of people at ATMs this weekend. I'm in Cali. Wow. Pulled mine. History is rhyming. So a lot of people literally pulling out. Friend of mine works at a bank. Wait, was this? And he is the most worried. There you go. Thank you, Andrew, for that. Bill Clinton. Probably not real Bill Clinton. Says, I just moved 20K of my credit. Yeah, definitely not Bill Clinton. Wait, more like $20 billion from my credit union to Fidelity, getting 5% on T-bills versus basically 0 at the credit union. There you go. Thank you very much, Bill Clinton. All these regional banks will go bust. Take your money out while you can, says Naked Trader. That's not my opinion, but it's Naked Traders. YouTube is my TV, says my name some regionals with the best balance sheets. Yeah, that's true. That's true. YouTube is my TV. If you're actually good at fundamentals and you could check all the big balance sheets out, the market will already be sniffing them. But what today is, you're absolutely right. And I know what YouTube is my TV is saying. He's saying, okay, well, we're going to watch KRE live on the side. What the? I have full edition. Oh, so stupid. All right, let me see if this one works. How dumb is that? So anyway, if we go over here, KRE, and then we put the US 500 back on for a second. So you can see it's down 15.86%. Damn, that's pretty wild. Then what that allows us to do is you could say, okay, well, everything's sinking. Every regional is sinking. And because they're all sinking, there could be that the market's just algo swiping everything and there is actually some good deep value in there. The problem is you have to be able to figure that out. And that's not easy. Not easy. So some interesting zones to look at here as the S&P 500 gets melted away. Underneath this zone here, 3,800 flat, that might be an interesting little algorithm spike level. I could see markets taking that zone and then having a little bit of fun with it as the markets freak out here. Also, I am looking ahead for CPI. So today's close is going to be important. CPI comes out. Remember, guys, there's a huge risk on the CPI which is 1 hour before the market open on Tuesday. So that's going to be a big deal. That's going to be a big one as well. Tesla at 164. Yep, it's in that zone, down 5. Look at Apple, up 0.06. Stupid thing. Look at it. It's floating around. 0.05, 0.06 actually up. It's like is Apple Treasuries now? Is that Treasuries up 2.87? High yield, junk trash, down 0.74, and LQD up 0.65. So again, Treasuries doing the best. Silver doing pretty well. Copper actually made a bit of a comeback there just before. And gold and silver just loving those yields going down. That's a big sell-off that we just saw, 15% down. You'd think there's some reprieve here in regionals. Like, that's just a lot of sell. Here are some of the big percentage movers from the regionals. 75.92 halted most likely all these top ones. And you can see all these 20s are still moving around. But in general, lots of regional banks down a lot. And yeah, it's a day to remember because that's a flash crash in regionals, basically. Apple is buying back stocks to control share price, burning their cash for nothing. Yeah, that's right. Moderna doing well today. When you earn no money, it's great day when yields go down. Yeah, anything in biotech will like low yields. So bio is certainly one of the sectors. Machines are selling. Yeah, these were machine sales. That's a flash though in KRE. It's probably extended. I mean, 16% down on regionals. To put it in perspective, everybody, if you look at this on a weekly chart and you think about the sell-off, it really hasn't been. The last time we saw this, we shut the world. We shut the world, which is definitely the most scary time I've ever been in the markets. And I came in the GFC. That, if you know how to read market conditions, was terrifying. I can tell you right now, the bonds market freaked out so much, it thought it was a GFC within like 4 days. The stock market hadn't even caught up to it yet. The bonds market went crazy. It's not like that at the moment. Over here, of course, we can see what happened with KRE as well. This is a pretty big sell. Why do you think gold's going up? Simple. Yields, man. Yields gene dropped across the board. Gold loves that. Most people don't understand it. I'm one of the only channels that probably talks about it because, by the way, no one really knows about that. They all think it's an inflation hedge. Wrong. It doesn't. It's a currency, guys. It's a currency. So it's a little bit nicer currency today. KRE run for the golden pocket fib over the last run. Actually, yeah, I want to load KRE up again. 1 second. Let me bring this on for a second here. Yeah, this is extreme lows. Oh, I just feel like that's such a massive flash, but that doesn't mean I like it. Just interested. Okay, it's in the middle of nowhere. Could be more to go. But geez, look how close it got to that gap fill. It's a gap fill that sits over here, 41.46, something I put on the weekend. So yeah, a little bit of a reprieve here early. Thank you very much, Phil. Appreciate that. Remember to like, fellas. Let's get the 1K. Remember, it's past midnight for me. Yeah, but it's 1 hour earlier thanks to your daylight savings time, which I'm very, very happy about. Appreciate that, though. Credit Suisse is the one I'm watching. Yeah, Credit Suisse. You put it on the 3-screener. So if we go triple screen and we load the old Credit Suisse up for a second, you're absolutely correct. $2.40. This is down 9.8. No buying pressure. Big sell. KRE finding some reprieve, pushing the markets up. That's still the one to watch. And of course, Credit Suisse here on the right-hand side this is a disturbing one. I mean, what is this going to do? Go to $1? When does this get closed? And basically, this is the real story. I totally agree. Credit default swaps. I will tweet about it and put it in tomorrow's show for sure. I want to know where those credit default swaps sit at the end of today to figure out whether this thing is about to go bust-a-ramus. Absolutely, Stacy. I know you know how to set alerts. You got to set a lot of alerts. Alerts going everywhere. So stories for today: Credit Suisse, KRE, Credit Suisse, KRE, and yields. But yeah, it's really just a one sector show pony today, which is regional banks getting absolutely destroyed. Whether that becomes contagious into the rest of the market, we don't know yet. And to prove it, there's your difference. So this is your differing factor. There's KRE down 15, 16%, financials down 4, energy hates cuts. So that's to make sense. Gold, beautiful. Staples, utilities, healthcare, companies that make no money, biotech, they like the rate cuts. And technology only down 1. So retail won't be feeling this one as much as the old economy bankers will. What about BTC? Either it's manipulated or short-term correlated with gold. Yeah, I think people think it's gold. So they're buying it like it's an alternative asset. Look, BTC hasn't been around long enough to really know what it's correlated exactly with. I've seen it sometimes buy when, people, today is a day where you might think, wow, it's hedged against the market. Yeah. I like Bitcoin, but I see it as a growth stock. So yeah, are growth stocks selling off today? No. So because growth stocks aren't selling off today, BTC, but if growth stocks, well, that's a big shift. Holy moly. Must be news. That was a big shift. Basically 1% up then. What just happened? Someone get the news. It was a big buy. Yeah, big buy. Didn't quite swipe the low. So we're coming back to that crit. Let's have a look at the 5-minute chart. I'll just switch it back to a single here for a second. Go 10 minutes. Okay. Oh, we just took that high. Okay. We didn't make a new low though. Would have preferred that. So some people are going to see this as a double bottom now. I don't see that. I prefer if this had swung the low of the futures. So obviously this is probably news related. Someone will share it in a second. Or it's just an algo pump. Tech's rallying, yeah. Key levels for Tesla, we hit one this morning. See? Right on there. Bam. So yeah, big rally here. Still regionals getting suffered. Still pretty much the same storylines, except for the market's shifted to the upside. See no news, probably just algos then. Trying to go for the gap fill. Do remember CPI is still coming out. So it depends what you're trying to do here. Yeah. If you're trying to trade, well, we saw a little trade before that went down to the lows. Very nice. You could have, if I was watching this a bit more closely, you can see here an actual reverse tweezer. So there's the reverse. So you have tweezer the short, tweezer the long. Now we're here testing this area. Previous support. This could be where the markets actually find some weakness. We've gone not quite flat yet, but we're almost flat. Remember, this is a wild day because markets moved. And I will repeat this. Markets were up here. So you take the closure level. They were up 1.96% before. Then they dropped 1.3, which is a total shift down at one point today from the high. We shifted down 3.16. We also saw KRE just get destroyed this morning. So it doesn't mean it's over. Gap fill? Yeah, it could be. I mean, markets basically just got there. Some bullish. I'm just having a look at the charts here. How do I feel about it? Probably not much, really. I mean, I know where my critical zone is. I want to see that busted for real bulls to be back at the markets. I mean, that's the way I just look at markets. Until that's done, it's shady. Shady. Buying volume's pretty strong. Yeah, buying volume would be good. Natural gas is up due to the lower dollar. Natural gas is up because it hit our key level. That's how I like to see it, Lieutenant Dan. That's correct, Richard. If it does end up being in the proper banks, that'll be a big deal. Yellen is loading the boat to set sail. Titanic is sinking. Yeah. There we go. We went green on US 100, but remember it was 2% up almost before. So this is where that just actually filled a little zone there, hitting kind of a key little crit zone. Interesting level. Certainly an interesting level here for markets, kind of finding that little critical high, previous supports. Let's have a look at that's the US 500. Let's look at the NAS. So NAS also coming back up. Didn't make a lower low. So that usually means it's not over. I mean, at least my technical opinion on it. But we'll have to find out. Interesting morning. Colby Warshall says, FX Evolution, did you see the 50 basis points probability jump from 56 to 84 instantly this morning? Hey? Are you sure about that, Colby? I would think it drops to 0 or 2 to 3%. Imagine the smart dollars was jealous of the January, Feb rally, and now it's payback on us. Hey, people hated on that chart, Dennis. Even though it's not even my chart I produce, I just like using it as a partial tool. Yeah, but yeah, people were like, smart money, not so smart now. Every time that happens, it's like Warren Buffett's an idiot. That's what people say. And then all of a sudden he's proven right. Warren Buffett's a god. Look at the VIX. Yeah, we can check it out. I mean, I don't know. I'm not really watching the VIX as much at the moment till we hit. I got alerts. I want to see 30 plus. And we hit it this morning, but we didn't. I want to see 32, up here. Generally speaking, though, this is where you want to see those VIXs. I want to see a 30 plus day close. We hit into that. Then we can start and then we hit a 37.50 and then I get excited. VIX to 60 this month. That'd be pretty wild. The VIX is broken. That's what everyone said. Does it matter from a technical perspective that the previous low, 1 second, was before market open? No, not with futures. There's a lot of trade in futures now. I am using you got to use the futures for that type of thing. But it's a good point. I want to see VIX 45. That would be sweet if you like buying dips. Yeah. High VIX, usually good. That's a real fear gauge. And yes, we've seen it obviously come back through today. So the story goes, everyone, is that basically the US 500 just hit kind of like a little miniature zone. We're not technically at a super duper level, but I like basically from 38.40 down to 37.50 for where buyers are. I particularly like here. CPI is coming out tomorrow. We saw KRE getting obliterated this morning. So other banks obviously feeling the pain. I'm sure there's stories to come out about that. Don't worry. We've got you covered. I'll be following all the stories tomorrow. So yeah, make sure to stay tuned. And for now, stay safe in these markets, everybody. Make sure you're ready for everything and consider the risks before entering. Yeah. Consider your risks because this is the type of proofing days that you've got to look at and say, well, what could I do better? Thanks so much, everyone. Thanks for watching. Subscribe if you enjoy the content. We will catch you for the close. I'll make the video. I'll have it out nice and early for you, or earlier for the East Side Coast people. And yeah, what a blockbuster day. KRE absolutely getting obliterated. Certainly something I would keep in the back of my mind just to say, I was there for 15% down on regionals after another 15% down. It doesn't happen all the time. So, yep, stay tuned. We'll catch you at the close. Bye for now.